Okay, if you have ever watched a stock go high, pull back a little bit, and then go higher, that might have been a bull flag pullback. And that is what we are going to talk about today. Welcome to Trade with Raven. My name is Raven. I'm a new trader. I've only been trading for about a year. And if you're a new trader, come on the journey with me. Let's learn together. Okay, let's talk about what is a bull flag pullback. I'm sure if you have started trading, this is something you've heard about. So let's take a look at a graphic that I have that explains the parts of the bull flag pullback. Okay, so the first part is the pull. You can see here that the price action is increasing and at the same time the volume is increasing. That is important, so remember that. Okay, that is called the pull. The second piece is the flag, okay, and the price action is pulling back. Those are red candles. That's called the flag, all right? Like the matadors with the bull and the red flag, they're waving the red flag, okay? This is the flag saying something's gonna happen, something's gonna happen. And then this third part is the breakout, okay, where the price action continues higher and the volume increases. Okay, so there are three parts. One, you have the pull. Two, you have the bull flag. And three, you have the breakout. Say it with me. Pull, bull flag, breakout. Good job. Okay. This is one of the most reliable setups in momentum trading, okay, because it gives you three things that you really need. It gives you a defined entry, it gives you a stop point, and it gives you a target price. Wonderful, wonderful. Okay, I trade this every day, and it was one of the first setups that I started trading, and I still use it today. It's my main setup. Okay, so let's look at this graphic again. Like I said, this is the pull, this is the flag, bull flag, and this is the breakout. You might have heard the term bear flag. That's if the price action is going down, the price goes up a little, that's a bear flag, and then keeps going down. That's generally when the price is dropping and people are shorting stocks. I trade to the long side. I'm a momentum trader, so I am only looking for bull flags. Okay. Now, like I said, a key point to this setup is the volume. You can see that the volume's increasing, it drops down, and it keeps going higher. So, like I said, we have your entry, your stop, and your target price. So the price action goes up, it starts to pull back. Okay, the first candle to make a new high after the low candle, that is your entry point. Okay, that's your entry point right here, right at this point right here. Okay, actually, I don't know. This should be lower. I would be nervous about, because I might think that that's the breakout. Okay, but you know why I wouldn't think that's the breakout? There's a lesson here, because see, the volume is still low. That would tell me, nope, it's not breaking out. The volume hasn't increased. See, that's how I got caught in false breakouts multiple times, because I would think, oh, it's breaking out, but the volume would still be low. Now on this one, the price breaks out over the low candle and the volume increases. Okay, so your entry point is the first candle to make a new high after this low candle. Your stop is the low of this last low candle, and your target is the high of day, okay? Or the high of this move here, okay? So now that you know what a bull flag is, the three parts of a bull flag, and the 3 points of entry, target, and your stop, let's talk about what makes a good or bad bull flag. So you don't want choppy price action. You don't want choppy volume. Ideally, it would look clean like this. The volume going up, the volume coming down, the volume going back up. If it gets choppy, then it's harder to tell exactly where the breakout is. Okay. And also, you want to keep an eye on how far back your bull flag is pulling back. If it's pulling back more than 50% of the pull, then it's not a Bull Flag Pullback anymore, at least not on your chart. Okay. So let's look at one of the trades that I took. This is a trade that I took last month, and on AIFF, I analyze all my trades in Trader View. So this is the 1 minute chart, and you can see here I've got several indicators on my chart: the 9 EMA, the 20 EMA, VWAP, MACD. I've already done videos on the 9 EMA and VWAP, so you can go take a look at those videos if you want to know more about those indicators. I will be going over MACD and the 20 EMA eventually. I'll be doing educational content on non-trading days. During trading days, I'll do a recap. Okay, so as you can see here, the price started to go up, the volume started to go up. This is our pole right here. All right, the price rolled over, price is coming down, volume's coming down. This is the pullback. This low candle here is where things started to change. I was looking for it to break out over this level here, right about 208. Okay, so where did I get in? I got in at 208.5. Perfect. This was like a perfect entry. This is why I'm using this stock, because it's a clean looking bull flag and my entry was so perfect. I'm so happy about that. Okay, so whoops, that's the 5 minute chart. Let me go back to the 1 minute chart. So right as it broke up above this low candle, that's when I entered the trade. The stop would have been the low of the last candle. I still set like a specific stop on all my stocks. And here I said 10 cents a share, but actually this wouldn't have even been 10 cents a share. If it had dropped below the low of the last candle, below 205, I would have, or should have, sold, okay, on the bid. But in this case, it did go up. Okay, and I also, the one thing that I was looking for was, see how the volume increased on that candle? That's the key. Okay, that is the key. Sure, could the volume increase with the price and could it still be a false breakout? Absolutely has happened, but if the volume had stayed low, I would not have entered. Okay, price went up and I took my 10 cents a share. Okay, so I actually got $52.50 on that. Now, I could have let it run. I'm getting better at letting my winners run up higher. In this case, I should have gone for 20 cents a share. That would have been easy. And if I was really brave, I could have waited until it got extended off the EMA, or maybe even waited till it gave back a little bit of the price. But in any case, this is a very clean looking bull flag. On the 5 minute chart, you can see it was all happening. Everything happened within 3 candles. I bought here, I sold here. So all of that happened within this candle here. Now you can see after the price rolled over up top, okay, it started to come back up. You conceivably might have thought about trading this as a breakout, okay? Right here to here, this would have been a breakout, okay? But then up, it started to roll over. So, all right. So this is a stock that is making a strong move, and the pole is formed. That's how I use it. And I'm looking for that pullback. I'm watching the patterns form, and I don't jump in during the flag. I wait for the price to go up, and I wait for the confirmation of the volume increasing. That is really, really important. And I make sure I set my stop at the bottom of the low flag or at 10 cents a share, whichever is less, because I'm being really conservative about my stops right now. Let's see. Okay, common mistakes: entering during the flag instead of waiting for the actual breakout. Okay, chasing the breakout too late. Oh, I have done this. You can see this on a bunch of my stocks where it breaks out and then I wait till like 2 candles to get in. And sometimes I wait and it's at the top of the breakout. Okay, and then it rolls over, and that has happened to me sometimes too. Ignoring volume. Okay, ignoring volume, that is dangerous because that is one of the key factors in determining whether it's a real breakout or a false breakout. Okay, very important. So again, you want to make sure that all your other indicators are in alignment. I mean, first of all, let's rewind for a second. Before you even take this setup, you should have already determined that the stock met your criteria for stock selection. That's step one. And step two, you should have already checked your indicators to make sure that everything was pointing in the right direction. In this case, the price is just tapping the 9 EMA. That often happens with bull flags and stocks stair-stepping up. It'll pull back right to the 9 EMA, maybe the 20 EMA, and then keep going higher. So you can see that it came up, tapped the 9 and 20, up, tapped the 9 and 20, up. Okay, and then it kind of started to really roll over and MACD went red. And we would not be trading if the MACD was red, right? I'm watching you. Okay, so let's do a quick recap of what we've learned today. The bull flag has three parts, right? It has the pull, the flag, and the breakout. And the other three things come in threes, right? It's also great because it has a stop, an entry, and a target all built into the setup. Not all of them do. Not all of them have a clear point of entry and a clear stop and a clear target price. So this is definitely, if you're going to pick one setup to do, I really recommend starting with this one. It's just a lot easier to see. Like, it took me a while to see it, but once I started seeing it, I was like, oh, I get it. I get it. Okay, so this is definitely the one that you want to start with. And let's see. I think that's it for today. If this helped, please subscribe to my channel. Like I said, I'm doing daily recaps on trading days. On non-trading days, I will be posting educational content. And I did live stream last week for like an hour, and I will be doing more live streaming. I'm really excited about that. I'm looking for feedback. If you have any comments, questions, concerns, feedback, constructive feedback, please. Feedback, please leave it in the comments. And I'm also posting over on Substack. So I'm choosing a goal of the week. And each week I'm going to work on a goal. And I am posting Monday, Wednesday, Fridays over there. That's pretty much it. So I will see you next time. Trade smart.